Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning. Sorry I'm late. I'm having some technical issues here. Actually, while the thing was going, I fixed two of the issues. Let me fix one more thing. I don't know what the deal was, but the lighting was not working. It really bothered me too. Made it too if I turn this light off, too dramatic. Too dramatic. Okay, guys, let's get into it. Come over to the charts here. Guess I can put my headphones on. Got some rollovers for the currencies today. We better make sure we do that. So, the treasuries did gap a little bit over the weekend. So there was this little jump here, and I think that was because the back and forth between Israel and Iran was a bit more I don't know, there was more flashing lights than people expected, I think, right? But that has come down, so that's all very interesting. The thing that I find very curious is that, okay, this was because of what, CPI, I believe. One of these was CPI and PPI, and then we got on Friday the whole Israel thing, but they retraced most of that. So how much of that was really actually PPI? I don't know. Okay, well, anyways, S&P 500. There's been back and forth when things started to go in Israel. They took a big hit, but yeah, they're on the upside this morning. So maybe treasuries are more concerned that the economy is just going to keep rolling on. I don't know. Oil. Okay, so oil spiked super hard on all of the Middle East tension. It is headed down, though, this morning. Gold and silver. Well, gold is looking pretty good there. Silver's still looking amazing. Copper. I mean, the thing with copper is that this was coming from, copper looked so great before all this. Now I kind of feel like it's just kind of meh. Even though, I don't know, some of this you could consider meh as well. Japanese yen moderated a little bit, but it is still lower with the treasuries. And the dollar, 97.41. And the Bitcoin trying to so that really came down. So the Middle East tensions was a sell for Bitcoin. So Bitcoin is still very much acting as a flight to safety, or sorry, not a flight to safety, but a risk asset. They're fleeing from when things get rough. So yeah, kind of interesting. Coming over here. Let's see here. I think I've got some things set up wrong here. Okay, these should be M's. Yes, because it is June. These should be U's. Oh, these are not U's. Okay, that might help. U. And U. F you. Same over here. Ooh. All right, let's see here. AO, this weekend was insane. Markets have not crashed yet. Which part of the weekend was insane to you? Israel 9 Iran. Iran ain't playing. Lots of fun getting a sighting over there. When will go oil to go to 300? Okay, so the estimates that I saw from the analysts, like the bank analysts, were saying that the bad case scenario for oil was like $120 and above. Okay, so 300 is maybe a little bit too wild. Sorry, I should come over here to this other screen. Okay, where are you? Yeah, sorry, I spent a lot of time trying to fix this light. I don't know why it wasn't turning on, but a so-called Iron Dome aerial defense of Israel ain't so iron. Well, I don't know. I don't know about that. Like 90, you shoot down 95%. That's pretty impressive. The Iron Dome is extremely impressive piece of technology. It has not prevented Tel Aviv from coming out completely unscathed, right? So all that time Iran has been using kid gloves. Well, that is true. That before they just kind of wanted to puff their feathers up and look big and scary, but they weren't really. The exchange that we had earlier was not really anything, right? Earlier in the year. And yeah, they go the volume route so that that 5% gets through. And they did a lot of using the older missiles first, so that when you're running out of ammunition or something like that, then they can use the higher, faster precision ones. Okay, but business context says Israel is finished. That's pretty... that's a silly and ridiculous thing to say. So I think this is another one of these situations where I think that seems to be this segment of the population that they see what's going on TV, and for some reason they have this it's all I'm kind of think of this in terms of like large language models. Like some people have this context, so when they get this information, the way that they interpret it is just like so dead wrong, right? So a lot of what you're seeing is propaganda. People trying to say, oh, look, this is really, really hurting Israel. Israel's going to be really, really damaged from all of this. This could be the end of Israel, right? That's what Iranian propaganda wants you to believe, okay? But let me sprinkle a little bit of reality into this, okay? Israel has complete air supremacy over Iran. They can shoot at basically anything that they want. The only thing that they're not able to do right now is that they don't have bunker buster bombs, so they cannot reach the Iranian facilities that are deep, deep, deep underground. But they are just absolutely decimating the IRGC. Is that what the Iranian Guard, Central Guard? I don't remember what the name is. So they are just absolutely dominating Iran. And Iran, meanwhile, they can shoot a bunch of missiles kind of willy-nilly at Tel Aviv to scare people. But okay, Iranian Revolutionary Guard Corps. But what are they actually accomplishing? Is Iran actually hitting things of strategic value? I mean, they've maybe hit a few things of strategic value because there are guided missiles that are hitting military targets and stuff, but and like the death toll on the Israeli side is actually like shockingly low. I guess maybe because they're hitting like central Tel Aviv at night when nobody's there. But yeah, they're not really hitting anything of value. So I think, well, probably the most likely outcome from all of this is that they make a deal of some sort, a deal that probably isn't going to be too favorable to Iran. The other possibility is that there's regime change in Iran. They are very, very much trying to strike in a way that would enable dissenters and the people of Iran to rise up against the mullahs and take over. And it seems to me that the Israeli objective at this point is regime change. I don't think that that's the most likely scenario, but it is a very strong possibility. So I wouldn't, I wouldn't be taking trades on this idea that Israel is finished. That's probably not a good trade. Okay? Just saying. But that said, I do think that the fireworks back and forth was a lot more than we were prepared for. It hasn't seemed to have moved markets all that much, but definitely people online, I think, especially when we were seeing the hypersonic missiles. Now, the hypersonic missiles that we've seen, those aren't like the new special ones that Russia has and everything. No, those we're talking about like Mach 2 versus Mach 20, but it's still pretty impressive when it hits. Okay, business contact hackers. Did you purchase both Jigsaw and NinjaTrader? So no, I purchased Jigsaw, and I used the free version for a long time on NinjaTrader, and then I was using a friend's license for a long time, and then I have been using a developer license, but then I've gone back to using a free license. So right now I'm using a free license. So the thing is I don't execute under NinjaTrader, so I don't have to purchase it. I execute in Jigsaw, ergo, yeah, it's the whole thing. What's sad is Netanyahu bolted to Greece while was he in Greece? I don't know what he's been doing there, but there might be many reasons why that would be what you would want him to be doing. Okay, now the other thing was his plane, but he was not confirmed to be on board. Jigsaw has a volume market profile. Sure. I mean, it's as good as any other volume profile. I tell you what, man, that's one of those things where it's kind of like, I don't know. I feel like that a lot of what retail traders look for in platforms on these things is kind of silly. Let's see here. I can pull one up for you. Select chart type, market profile. I forget what is what. Footprint, market profile. Oh, I think that this is like the TPOs, isn't it? If you want like a regular volume profile, I would probably do candles like this. And then we come in and we add the indicators. JT volume profiles. Okay. Am I doing it wrong? Select off. Oh. I need to change settings, I think. volume profiles, profile type by sessions. There we go. There you go. It's weird how for ZBZ and ZF options activity is pretty big on the 0 day to expiration, but ZT has no volume for today and it's all on the 2 days to expiration. I'm really surprised by how much activity just happens in 0 day to expiration options, but apparently there are things about them that the quants really like. So what about TPO? Yeah. So that was the other one. Was if I come back to here. For TPO, I would probably pick these ones. This market profile. I think it's this one. And then you get the ones where you get the colors. This one actually has it. There's the colors, and then what I mean by colors is like, yeah, the first 30 minutes is one color, and the second 30 minutes is another color, and so you can kind of get an idea of when it was there as well. But like I said, this is where one of those things where I think that because we as retail traders, we're really, really prone to wanting to see patterns where there aren't really any. And we want to do endless technical analysis on things. You know, so the way that it looks really is really important to us. And I kind of think, what difference does it actually make to your trading? I don't know if it actually does. So if you go on my channel, I have a more expanded video on this, but the video is called Improving Volume Profile. The basic gist of it, though, is that there's a couple of flaws in the way that people use volume profile. And I think that there's two major ones. The first one is that the majority of the volume occurs at the beginning and end of the session. So what you see as the point of control is mostly just a function of where price closed for the day. So you're reading a whole lot into what is probably one of the most unreliable pieces of information, which is where the closing price was. Okay. But then the other thing is that market auction theory is kind of based on this idea that the market will, under normal circumstances, will find some sort of an equilibrium around what is the true value price. They think, okay, there's this price that like, let's try and draw a thing, is like, we're coming along here, right? Nothing's happening. And then something happens, like a report is released. And when that happens, the true value jumps like this, and now it's over here, right? And so the price will do this sort of a thing where it will oscillate around here, and then it will like way overshoot, and then it'll come back, and then it will find the place where the most volume is traded, and you'll get this profile like this, right? And then I can look at that and I can say that is the fair value price. That's the way that they think about it. And then every once in a while, somebody will come in and because they think that it's higher, the market will come in and will try and price in that new information. And so the market will auction, and this is where the auction comes in, is it will just go up and up and up and up until like that's the highest price that people are willing to take, right? Just like in a real auction, you know, do I have 50? Do I have 55? Do I have 60? And they keep going until nobody is willing to one up each other. Okay, and so that's their idea of how the market works. The problem with that theory of things is that it's wrong. It's just there is no fair value. Markets are not informationally efficient. And so why then do you get this distribution? Because this is weird. This Gaussian distribution. Why would it be like that? Shouldn't it be just completely disorganized like that? Shouldn't like equal amount of volume at all prices? If the market was truly random, why do we get distributions? Well, it turns out that it has to do with the way that liquidity works and the way that different market participants react to liquidity. And there's this kind of issue where if a lot of volume happens in one place, or price kind of skips through an area really quickly, that kind of upsets the market makers. The market makers go, oh, I don't know if it's a good idea for me to take on a lot of inventory here. And so they don't provide a lot of liquidity. You'll often see it here in ZN. Right now it's 1200 by 1200 on the inside, right? But often you will see it be only like 400 to 600 like it was just there, and then it ticked down. Now they're only putting 300 on the offer. We might see it tick back up, and then they're only putting 500 on the bid, and it'll tick back down and only putting 500 on the offer, right? Like the market maker is just not willing to put a ton of liquidity on at that price at 18.5 right now. We're lucky that because usually when I'm talking about this, it's not that situation, but we're kind of getting a little bit of that situation. So the more that I'm seeing that 18.5 be less than 500 contracts, the more that it's a big red flag to me that like market makers don't like this spot. Market makers are weary about adding liquidity here. And the issue that this causes is it only takes like 500 contracts to move up or down, but it's going to take like 2,000, 3,000 contracts to move outside of that. And so if I want to buy, why would I be hitting into the 19 when I have such a high chance of putting a limit order at 18.5, or I can wait for it to tick down and take it as she goes, right? And so when this happens, it kind of creates a situation where price just gets stuck. This is why you can have in the treasuries these situations where it seems like oops we're getting super good trend, and then all of a sudden, like, what the heck, it just goes nowhere. It's actually this is probably a better example, right? We're getting good trend down, but then all of a sudden, what? How are they able to go from fast trend down that quickly to literally one tick range, just basically just ticking back and forth across one tick for an hour? How does that happen? That's a liquidity hole. Okay. And the thing is that if you're trying to buy a whole lot of something, right, you might be really taking out bids when you're pushing it down, right? But when it does this, what you do is you kind of scale back how much you're taking. But this period ends up being about 2.5 times longer than this area right here. Is what tends to happen. Might actually be able to use our little tool here to see. Let's see how well it matched that. So we call the Fibonacci time extensions. So I can go from there to there. So there's 100% and there's 250%. So it was actually longer than that. That's a little interesting. Okay, but that might have been the case that the guy started executing here. I don't know. Anyways, it tends to be 2.5 times longer. But you can execute just as much, if not more volume in this area than you are here. So you're selling super hard, and then you just kind of a little bit of a trickle of a sell. But you can end up, because it's there for so long, selling more here than here. That's what causes the volume profile. So this for the overnight session is going to be where the volume profile sticks out, simply because it was there for so long. You see? So that is why we get that phenomenon. It's actually kind of almost random, is that's just where the market makers decided to freak out, pull out. And sometimes it just happens like somebody makes a mistake there, trades too much or something like that. That can cause those. So those areas, like where the price settles at, is actually a little bit random. So looking at it and saying, okay, this is like the fair market price now, is going to give you a very, very inaccurate view of what's actually going on, right? So what we actually need to do is we need to say, okay, these different flows are people buying and selling. So something maybe happened that caused people to buy. Where it ends up at is purely a function of how much they traded. So the price that we end up with is not a reflection of fair value. It's just a reflection of the amount of contracts that traded, right? And so what is fair value? Well, we don't really have a fair value, but we basically have to track the fundamentals and the actual price separately. Have to track them separately. And when we make our predictions, yes, like what the fundamentals are, I need to know what the fundamentals are, new piece of information. How does that change the fundamentals in order to make kind of longer term horizon predictions? But when I'm taking a day trade, I am just trying to predict those short term orders. Okay. What about heat maps? Isn't that like the same thing? Why would liquidity matter? Is there ever an issue in getting their order filled? Okay, so in a ZN, getting filled where you want, it's usually, as long as it's a balanced area, it's usually not a huge deal. But what it does matter for is, do you want to get in a trade and sit in it and have that trade go nowhere for 45 minutes? Nobody likes that. Wouldn't you prefer to know when it's going to start doing that and maybe wait until after the 45 minutes when it gets moving again to take a trade? Right? So that's where that becomes useful, is you can kind of avoid these bad trades, or at least understand that, like, if it's in that and I'm taking a trade in there, that it's going to be a while before it gets moving again, and it might not actually get moving again. So what happens is, if I want to execute a ton, I will move the market to create that liquidity hole, execute within that liquidity hole as much as I can. And when I've exhausted that liquidity hole, I push it up to the next one. And then I do that over and over again, three or four times over the course of a day. And that's when you get like trend days and stuff like that. Okay, so that kind of ends up being the optimal strategy for the really big meta order, the guy that's executing a large amount, right? So what'll happen is, okay, we moved down. Woo, that's really big. And then the guy that is like just using price action and regular technical analysis sees this and goes, oh, okay, we have found fair value, so I want to trade around this. But has that actually happened? No. The meta order is just waiting for the liquidity to normalize. They're trying to take advantage of this area as much as possible, and when the liquidity has recovered, they're going to push it down again. So if I know why they're taking this trade, and I know how much that they're going to trade on this trade, I can say, hey, look, this is only half of what they were actually going to trade. Now they're going to do half of that. They're going to do a quarter of their total amount, and that's going to lead to another leg. And so I can wait for it to get like right here, and hit in on this and make that right there. That's essentially how I tend to use it. Okay. So I'm using liquidity to see what the lay of the land is, right? I know that if somebody wants to sell a ton, this liquidity hole is going to get created. So, you know, if I'm up taking a trade up here, great, I'm going to hold it. If I'm getting down to here, I usually avoid those because I know that this is going to happen. And there's no guarantee that this is that there's going to be this other leg. Maybe it's a situation where you know that another leg is really, really likely, but most of the time you don't. So, right. And by watching those things day after day after day, you kind of get an idea of how much volume tends to trade on this thing and that thing. That's why you want to look at cumulative delta on these. Going back over to here, I can kind of see that from here to here was about 5,000 contracts, which is, you know, about the most that the market will take in the overnight market. And looks like there was another 5,000 contracts here on this leg. Oh, by heat maps, I meant book map. So usually no. Every once in a while. So the thing is I come in at the beginning of the treasury session and then I trade the amount, right? So it's pretty rare that there's a situation where it's like there's a big order somewhere and I want to know how long has that big order been there for. That's the only thing that I think the heat maps does that's useful to me personally. So, yeah, I don't know. I think that you get more information from looking at the DOM. So what is the piece of information that I can see on the DOM that I can't really see on the heat map? Well, what I'm looking at is how much liquidity is the market maker putting up each time that it ticks. If they tick down, is there 400 to 600 here on the offer? Or is there like 1,200 to 2,000 on the offer? That tells me a lot about what the liquidity conditions are in the market. If it's every time it ticks down, it's like only 400 and then it ticks up and it's only 400, that's a liquidity hole. If it's ticking down and that offer solidifies pretty quickly, or it's immediately like 2,000 contracts on the offer, and then it ticks down again and it's immediately 2,000 contracts on the offer, that is, they're making a push, right? And you can't really see that very well on those heat maps. So I think that the raw numbers give you a better idea of what's going on. And the thing is that the number that matters, it might only be there for like a brief second. And so that's maybe not even a pixel on the heat map. So you don't see it on the heat map. Yeah, book maps are pretty though. Yeah, they're pretty, but I think that there's a lot of really some of the most useful information on the DOM is essentially being hidden from you. Instead, what it does is the heat map kind of focuses your attention on where large orders are. And so you see a lot of retail traders start to take trades based on where the large orders are, with this idea that either the market is going to go towards those large orders. So like in this situation, this order down at 12 is going to really stick out to people, right? So they're going to say, the trend is down. I'm going to take a short with the idea that it's going to get down to 120, right? And I say that because that's the way that I did it when I started. And once I started, recording trades and doing like more serious market data and looking at the existing research out there, I found that was an unreliable thing. You will get periods in the market where when there's a big order, they go down to it eventually every time. And then you get markets where they avoid those as much as they can. It's like the market shifts between regimes, and I can't predict when those regimes are going to switch. So it ends up being not a very good trade. Are there any big ones above us? Well, there's 24, but that's not nearly as big. Why 24? So one of the things that I will do is when I see something like that, I'm thinking, why? Okay, so 24, there was a swing from much, much earlier in the day that pivoted at 24. So that's probably why that one is there. It is when you do that, some liquidity gets left up there, and they put more at that spot for some reason. It doesn't predict the probability of us going up or down, but it does tell you, okay, that's there because of that. What about the downside? Well, the overnight low was at 10.5. So I don't know why it would be at 12. So that one at 12 is a little bit more unusual. Is it a strike? Is it because of the strike price? I don't know, because aren't they in quarters? So wouldn't it be 08, 16? Okay, taking trades based off of large resting orders. What happens when those orders are pulled? So my policy on that is that when I see shenanigans, I leave the market. So like the traditional perspective on this is like, okay, here's a big order, and depending on what happens when we get down there, I'm gonna do something different. Hold on a second, kids are trying to get in. I've had to put hotel locks on all of the doors so that Asher cannot elope, and so the kids couldn't get in, even though they had the key. What was I saying? Oh yeah, so you're gonna the trade would be, it comes down to 12, and if it trades through 12 with like less than 500 contracts, that means that the large order completely pulled and it was all fake. And so then we think, oh, okay, that means that this trend is going to continue, right? That's the way that I used to trade it. But what I find now is when things happen like that, it pulls, a bunch of people go, oh my gosh. And so a bunch of people get in there, and then it starts to go back and forth, and that tends to become a liquidity hole. So when I see shenanigans, I get out. Like the trade is, it's going to go down to 12. And when I see the 12 pull, I get out. I take my profits. I don't have to mess with that anymore. Let somebody else deal with the stress of what's going to happen in that key area, right? I want to take the trend into it. It's just like this. Another thing is like, people are looking for stops in certain places, right? Like if I'm looking past the last swing, like above this 24, are there going to be stops? Things like that, right? Well, what you find when you're coming up to a key number, it might be the case that you would see this at 24 because it was like a previous swing high. But it's much more reliable when it is at an even number. For some reason, everybody anchors around these even numbers. That's the way that human brains work. So let's do it at 111 instead. There's going to be take profit orders going up into the 111, and there's going to be stop orders after that. So what people think, the way that people game that out is, okay, if it touches 005, then maybe I will market order in on the expectation that we're going to get a little stop run here, right? And here again, I think that's the wrong trade. You're getting in when the real trade has ended. The real trade would be there's going to be a trend that's going to take us up to there because of reasons. There's some meta order is going to come in and create an imbalance and push us up there. That's the real trade. So I want to be in before the volume comes. That volume comes in after me and takes us up. And then when everybody else is getting triggered because we've come to the key area and all of the other retail traders are going, okay, here's where our signal is, I'm getting out. That's the better trade, right? So again, especially when I see really big orders stacking and pulling, like a lot in an area, that to me is shenanigans. Don't reward that. I pull out of the market. Because I used to wait for those areas and get in, and then I'd always just get thrashed around. Couldn't predict what was actually going to happen in that area, and I'd just get thrashed around. $24 is the strike price, not 12. Oh, yeah. Okay, so you're saying that the 24 is maybe because of the strike price. That may be. Although on that point, though, why wouldn't we see some at 08? Oh, well. There is some at 16 now. Does that perhaps mean that the options are favoring the longs today? I think I would still be favoring longs, although there is a 20-year auction today. So remember, 20-year is on a weird spot on the curve. People in general aren't as interested in the 20-year section of the curve. So the rest of the curve is done really well. 20-year probably not going to be as amazing as the others. But I think it'll be good enough. So if it's good enough, that should be able to at least buoy price here. So I think I'd still be favoring longs, although I don't have really like high hopes on how much it's going to go. At least 2 days out, options are favoring longs. Okay. So, yeah. Why is oil selling? I think that it is just, it was up really big because of flight to safety and hedging and stuff, and now things kind of come back to reality. But the thing that I have been seeing has been like, there's been a lot of oil refineries and things like that hit. But what we're finding out is that they're targeting like domestic supplies. So like the oil that was set to be used by Iran, that's the stuff that they're hitting. And the stuff that was already slated to go out to other countries, they're not touching that to affect the price of oil as little as possible. And so I think that there might be a little bit of, okay, the impact of this on oil supplies is not as much as we thought. And so they're pairing their trades or something like that. So let's see. Did I miss any comments back here? Yeah, the oil thing is interesting. This is again one of those things where it's like, I don't really feel like I understand the oil market, right? Because I would say that the trade is already over, but that is not a thing that I would have ever thought of ahead of time, Whereas, hey, the 20-year auction is kind of in a weird spot in the curve. And so when retail traders hear that the 20-year auction failed or was bad, they're going to overweight that piece of information when really you should probably discard it because, again, it's a weird spot in the curve. I know my market. And relative to where we were when that 20-year auction failed, we're higher. So it was a good trade. It wasn't an amazing trade, but it was a good trade. Okay, so if I don't have... I could have also pulled big resting order due to deciding they may not get filled there, so maybe possible trains of thought as well. Yeah, another thing that I see really frequently that you have to consider is that you might have a really big offer. So like the way that these guys' DOMs work, you put the order in like this, and then you right click it, and a little box comes up, and their box has an option for make this a refreshing order, right? So if I'm placing something and then making it a refreshing order, there's at least one workflow where you put the big order down first and then you change the properties of it. So sometimes when you see a big order like that disappear, it's just converting to a refreshing order. So that's one thing, another thing you have to consider. Not that there's ways to put it on initially with it being a refreshing, but that requires another key binding or whatever, right? Yeah, I love seeing some of the YouTubers doing that. I know it will go here, then I will trade. Wait a minute. If you know it's going there, then why didn't you trade it up? Yeah, exactly. So that's another thing is like, because they're waiting for a signal to complete, right? So they have an idea that I have this line, and if they're able to cross this line, they can't cross the line that is going to go down, right? But if it does cross the line, then it's going to do this, and that's where I want to get in, right? And I'm saying, nah, actually, if you think that we're going to get pushed up to that line, why are you not buying here? Why are you not buying as early as possible? Okay, now I haven't heard anything from my news squawk, but we did just move a little bit there. So that may just be from the open. The S&P 500 is moving up on the open. So yeah, if retail traders are watching a key level because it's moving average or previous point of control, or my favorite one being the floor pivots, right? I want to take the trade on it going into the pivot and then getting out when it's crossed it, rather than waiting for it to get to the key level and see what it's going to do and then go from there. That was kind of the thing that kind of turned me off to the way that Futures Trader 71 trades, because in the beginning I thought it all made sense and I learned a lot from it. But once I realized that, like, actually what really moves the market most of the time is a large meta order. So I want to predict that meta order coming in before anything has happened. If you're waiting for these key levels, you're kind of ending up doing stuff around places where most of those orders have already come out. So you're missing the real trade. But an even better way of thinking about it is, if this is volume, there's low volume and then there's big volume, right? And most retail traders, they see the big volume and they say, okay, something has happened. Now I'm going to do something. No, you want to get in when volume is low and out when volume is high. Because ultimately, what you're doing is you're predicting future orders. You want to get in before everybody else, and those orders push the price in the direction you want it to go. So the earlier you can get in and the less volume that's going on at the time, the better. I prefer the areas that are quiet, except for when I know that a liquidity hole is forming, right? But if it's been like there was a liquidity hole, it's been sitting there for 45 minutes, all the retail traders have given up on it, that's when I get in for the second leg. Right? How much of an advantage does that give you? I don't know. Maybe it's a small thing. But that's just based on what we know about how, the empirical research on order flow. I think that that's the way to go about it, is to predict the orders before there's any sign that they're coming. Or if you think, okay, I think there's going to be a large meta order, but I'm not sure, right? I want to see a little bit of buying before I get in, right? But the more sensitive my trigger is, the better. And then you get in. If I'm in and I'm not seeing that imbalance that I was expecting to see, I'm not seeing cumulative delta move up, then that means that the order flow I was trying to predict isn't there. My prediction was wrong. The trade is bad. I get out. And you scratch it. Cool. Okay. Something of interest to note, my current trades column for all three treasuries you have up, volume going into 1 to 2 ticks higher than yours do. Are you on ZNU? I don't know. That's kind of weird. Maybe we'll sort it out. Could be a problem on my side. Could be a problem on, Now the question is which side is wrong, right? Okay, now there's something else we've got to talk about that I think is relevant. And that is the marches over the weekend. So I have concerns about Kraken buying NinjaTrader and BS data becoming a thing. Maybe. But we're using rhythmic data, so. Anyways, because Donald Trump was having a military parade on his birthday, because that's something that he always wanted to do because it's super patriotic and stuff, and the United States doesn't have parades like that when all of the big dictator countries do. So he had a military parade, and so the left decided to organize a bunch of protests, and it was just kind of conveniently happened that this was planned because they had a bunch of protests about illegal immigration enforcement the week before. So because of that, that kind of boosted the people coming out to that event, and a lot of people showed up. I think they said that it was like the third largest march countrywide. So that means that, like, I think that under Donald Trump's, while Donald Trump has been president, that there have been larger marches, but I don't know if that matters so much. Now, okay, you have 215 in current trades at 20, and I have 612 at 20 half and 1 at 21. Oh, well, I don't know if that... Oh, okay, no, that actually doesn't matter. So for this session, you have volume at 21, and I don't. But was that... does your DOM reset on the session start? Because the place that you're talking about, that may just be because it was when you turned it on or whatever. Right? And what you see in the current trades, that is going to differ between data feeds. Like what gets left behind after you've traded through it. Because there might be one order that, like, you know, there could be some situations where an order gets put in this column rather than in this column, right? But again, if I see 600 and 600 got assigned to me here and it got assigned here on yours, then that's a problem, isn't it? I don't know if it's a problem that's relevant to our trading per se, but there's definitely something wrong with the data at that point. Okay, so where was I? Oh yeah, so there was protests. It was pretty big. Now, one of the things that I'm seeing on social media that's being pushed is, well, this is such a big march. That must mean the Democrats are set to have a really big midterms, right? No, not quite. Not quite. Because one, there's a lot of time between now and the midterms. Two, we find the follow through from like left-wing marches into actual action is pretty flimsy. There's a lot of people that they march, but like the marginally attached people or the people in the middle that actually win you elections aren't the ones that march. It was clever to not show up to the birthday parade. Sure. I don't know. I don't understand. So, I mean, I think one of the reasons they don't like the birthday parade is because Trump, the bill that they've got going, cuts like 1 trillion, I think it was. 1 to 3 trillion. I don't know. There was a 1 and a 3 in there somewhere. The parade was depressing AF. I didn't watch it. They cut like $1 trillion in government spending from some of these programs. And they're claiming that the parade is like 100 million. I don't know if it actually ends up costing 100 million. I think that there's one of these things where like certain costs that would have been incurred anyways end up getting attached to that and make it look like it was more expensive than it actually was. But even then, you're still talking about like orders of magnitude different, right? Like $1 trillion is a much, much, much larger number than 1 million or 100 million. So it's not really comparable. But that's why they did the thing. Like the thing that I think is so weird about the protests was that they were called the No Kings protest. And I really don't think that anybody, especially not in the middle, really thinks that Donald Trump is trying to like install himself as king or something like that. So like the whole theme of the protest just doesn't really seem to ring true to, I think, the vast majority of the electorate. But whatever. Is it going to make a difference? The issue is this. The electoral map for Democrats looks really bad. Okay. Now, you don't really know until like both parties have picked their person and you have polling of those two people against each other to really see which races are like close and aren't close. So we'll get a better picture of it when we're actually in 2026. But what we do know is that there are 3 Republican seats up for grabs in the House of Representatives where there is a Republican incumbent in a district that was won by Kamala Harris. Okay, so those are 3 seats that Democrats have a good chance of taking. The problem is that there are 13 Democrat seats up for grabs in districts held by Democrats in districts where Donald Trump won that district. Now, incumbents have an advantage and all of those sorts of things. But just when you look at the math, it's like, okay, if the Democrats defended in all 13 of those districts that they're, where they have incumbents, right? And then they won all 3 of those races where, it's a Republican. So they grab all 3 of those, okay? That gives Democrats control of Congress by 3, right? So, like, the best case scenario for Democrats in the House, like the crazy, unprecedented Democrat victory in the House, has them taking the House by 3 seats in 2026. You see the problem? And like the Republicans, they have a 3-seat advantage right now, and it doesn't really do much. And then you have the president, and the Senate is split. Okay, Democrats own the House. What can they do? Investigate, I guess. That's basically the only thing that changes, right? Is if the Democrats do really, really well in the midterms, then they can have more investigations against Donald Trump. That's really what it comes down to, right? So what I see right now is Democrats setting themselves up for disappointment because, one, I don't think that they're even going to do that. I don't think that they're actually going to win in the midterms. But then even if they do win, whatever the result is, they're going to be disappointed in it. But like I said, once you know who's running against who and you do the polling, then you can kind of look at, okay, here are the safe Republican and here are the safe Democrat ones, and here are the ones that are really up for grabs, and what are the range of possibilities there. Then we can analyze that more. Okay. So some information I think is going to be relevant in the future that will be pertinent to markets, right? Now, another thing that I think was important about it, though, is that part of the Democrat playbook is you do the protests, and then something happens at the protests that causes the public to sympathize with the protesters. That's really the playbook that they got, right? So, especially these things where like a shooter comes and tries to shoot up a protest, that's something that tends to help that political, would help the Democrats, right? So that was kind of the things that Republicans were concerned about going into the weekend. And what happened? Well, there was one guy that was shooting, martyr probing. There was one guy that went and did targeted assassinations against representatives in Minnesota. So I think that's what Octavius is talking about. How about Minnesota? I think we know who that guy is, and he has been caught. Correct? Am I correct? But they're kind of not sure about what this guy is or what he's doing. Like some people, this is another one of those situations where now everybody's trying to argue about, was he a liberal or a conservative, right? And there is some information to kind of suggest that he was a liberal that was mad at Democrat representatives for not being liberal enough. But then there's other people that claimed that he was conservative. So I think that the jury is out on that one. The other one was here in Utah. In Utah at the 50-51 march, the protests over the weekend, there was a shooting. Now, on this one is just a real, pardon the technical expression, but I don't really know another word to really explain what happened other than a real clusterfuck. What happened in the Salt Lake one. So at first, everybody just thought, okay, there was shots at the parade, so there was an active shooter situation, but then nobody died. They caught the guy, and there's video you can go out and find of, the shooter was trying to hide in with the crowd, and a guy saw that the shooter had a gun in his backpack and pointed it out to the police, and they arrested him. So that was kind of a crazy thing. Like, they're all hailing this guy as a hero. So there was an active shooter. Maybe he was going to try and do more. And this guy, because he was willing to speak up, they caught him. Let's see here. The no Kings flyers he had in his car, by the looks of the photos, are an obvious attempted misdirect. Could be. So that is one thing that I'm starting to notice with these shooters, is that the shooters seem to do things to make it intentionally confusing as to what his political motivation might actually be. Or they don't have political motivation. But this situation in Utah is kind of, I'm telling you what, man, you're going to hear about it. People are going to get sued. Because here's what actually happened. Was the guy, who, by the way, looks like a leftist. So we know his name. He has like Colin Kaepernick hair. He used to be part of a punk rock, an anti-government punk rock band. And was very much involved in like Black Lives Matters. He's a lefty. He's a lefty, okay? So the suspected shooter went off to the side of the protest. There are people that are like supposed to be observers and peacekeepers, that they have yellow vests. They see the guy go off there and pull his gun out of the backpack. They followed him because they thought he was acting suspicious. He pulled it out of the backpack and started moving towards the crowd. So they told him to stop, and the guy started running. So when that happened, the peacekeepers shot him. The peacekeeper shot 3 times. One bullet was a stray. One hit the suspect in the abdomen, just grazed him on the side. And the third hit another protester in the head, killed him. This other protester, by the way, was a prominent fashion designer in the Samoan community in Utah. So the shooter, the suspected shooter, never fired a shot. Never fired a shot in a state that has like full open carry laws. You can carry a weapon in the open without a permit, just as long as you don't have a round chambered. Can you believe that? You hadn't seen much about the Utah incident? Dude, so yesterday, Saturday night, it was so crazy because like I caught wind of it and started like searching Reddit really, really hard to see everybody coming in and explaining, like, give eyewitness accounts of what was happening and things like that. And then as soon as pictures of the suspected shooter came out, like instantly, all information about it was shut down, especially on Reddit. Like all of the threads about it on Reddit were like getting taken down, comments were being deleted, etc., etc. It was like they were letting everybody say whatever they wanted, and then as soon as it was like, hey, the shooter kind of looks like a lefty to me, all of a sudden it was like, we don't want to be spreading rumors and misinformation, so we're just gonna shut this down. Just like that. Isn't that crazy? But maybe it wasn't because he looked like a lefty. Maybe it was because once they realized that actually the person that was shot actually got shot from a stray bullet that came from the peacekeeper. Right? So can you argue that actually I wanted to open carry in the crowd, but I was kind of nervous and shy about it. But then after walking for a while, I thought, you know what, I think that this will be okay and I want to do it. So I went to go over and do that. And then when I was walking back, I heard somebody say something and that startled me. So I decided to run, and that's when they shot at me, right? So could you make an argument that like the suspected shooter was completely innocent? I don't know. Like, how do you prosecute the guy in that instance? Unless you can, like, you're going to go to his house and maybe you find the manifesto that he had written or something like that. Then something to prove what his intent was. Then you could prosecute him. But otherwise, I don't know. And meanwhile, like, is the peacekeeper that shot, is he negligent in some way? Well, I feel like he probably did the, like in that situation, I would want to give people the benefit of the doubt, but he's going to get sued. Like, that's what's going to happen, right? He's going to get sued. What's a peacekeeper? These were people that were volunteers for the 5051 organization that were set to be peacekeepers and had weapons in case something happened. Yeah. So, is the 5051 organization that had these volunteers, are they negligent in some way? Man, the oil. Okay, Iran has said that they will resume talks if the United States stays out of the fight. Oil is coming down precipitously. Interestingly enough, the treasuries are moving up on this, which is not what I would expect to come out on that flow. But it seems like the treasuries and the equities are both moving up and oil is moving down. So it seems that the fears of inflation from oil being higher matters more to the treasuries than the flight to safety. That's probably what that means. Did you see the anonymous video? No, I did not see that. I closed sell position in oil. Well, hey, you caught the big trade. Good job. Good job. I think that this is a little bit tepid, but the Iranians told the Saudis, I think it was, that they just said this. It's coming out on the Wall Street Journal. Ooh, okay. So it is time for me to get going, unfortunately. But this is very interesting to me that this is a buy in the treasuries. The treasuries were more concerned about the potential inflation from higher oil prices. That, I think, is a key tell here for us that might shift my view of the action in treasuries going forward here. I want to get going so I can make my lunch and get going and see where it's at tomorrow. I think I gave you all of the information that you need. So I'll see you guys tomorrow. Stay excellent, team.